This is your technical update from the LMAX Exchange Research and Analytics Desk for Friday, April 8th, 2016. Euro dollar. So the euro is showing signs of wanting to top out after posting another fresh 2016 high at 114.54 on Thursday. At this point, though, the market would need to establish a close back below the low that we saw on the 6th of April, which came in at 113.27. A close below that level would strengthen the toppish outlook and accelerate declines. It's important to note that the euro is stalled out into some critical medium-term resistance ahead of 115, and so there is risk for the market to pull back over the coming sessions. But if we do break back above 115.54, that will expose a direct retest of that critical 115 barrier. Sterling dollar. So cable remains under pressure, with the market now focused on a break below 140, which exposes that recent 7-year low from late February at 138.36. At this point, the pressure remains on the downside, and any rally should continue to be very well capped, with only a break back above 145.15 to take the pressure off the downside. Dollar yen. So dollar yen is broken down to another multi-month low, with the market trading down on Thursday to as low as 107.67 ahead of this latest minor bounce. But again, following the breakdown of that multi-week range, a measured move is projected towards potentially the 106.50 area. At this point, any rally should be very well capped, while ultimately it would take a break all the way back above 114.87 to take the pressure off the downside. Euro Swiss. So Euro Swiss has been pressured a little bit to the downside in recent trade, though overall the market has been confined to a broader consolidation. At this point, the market should be very well supported towards 108, with only a break below to compromise the recovery structure. Eventually, we should see fresh upside back above 110.24 and towards the multi-month high at 112 further up. Again, only a break below 108.10 would compromise the recovery outlook in Euro Swiss. Aussie dollar. So there are signs of the Aussie putting in some form of a top right now, and a potential double top in that, with a break below 74.77 to strengthen this outlook, which is the neckline, and accelerate declines back down towards the 73 to 72 area. At this point, any rally should be well capped, while only a break back above the previous weekly high, which was a 2016 high at 77.23, would compromise this toppish outlook and open the door for the next upside extension towards key medium-term resistance at 78.50. Dollar CAD. So there are signs of dollar CAD wanting to put in some form of a bottom, which could end up being a double bottom if we see a break higher in the sessions ahead above the neckline, which would come in at 32.96. A break above 132.96 would open the door for a move towards the 137s further up. But ultimately, though, while the market does pull below 132.96, the pressure does remain on the downside, and there is risk for deeper setbacks below 128.58. So the market is showing signs of a potential base, but this would only be confirmed on a break above 132.96. Kiwi dollar. So Kiwi has done a good job of stalling out, adhering to medium-term resistance up towards the critical psychological barrier at 70, and there's risk here for deeper setbacks now, back towards next critical support at 65.46. But a break below recent support, which comes in at 66.68, would be required to strengthen this outlook. SPX 500. So the S&P 500 is finally showing signs of exhaustion after an intense rally out from the February multi-month lows at 1808, with the market stalling out at 2080. At this point, though, we need to see a break back below 2021 to really strengthen the bearish outlook and confirm or strengthen the possibility for the formation of a medium-term lower top below the record high from 2015, ahead of the next major downside extension towards and eventually below 1808. Again, 2021 is going to be the critical low to watch over the coming sessions, which represents that low that we saw back on the 24th of March. Gold. So gold continues to be very well supported on dips, and the structure here now favors additional upside, with the market supported by that previous resistance turn support at around the 1190 area. At this point, an eventual breakout is favored back above the 2016 highs in the 1280 area and towards the 2015 peak from January of 2015 back at 1307. At this point, only a break back below 1190 would compromise this constructive outlook for gold.